Okay, guys. So if you're outside or outside on the deck, you can make your way. And this is one of the really, really exciting panels because as Wayne Smith mentioned earlier, banking services for digital assets and digital asset services is a really big pain point all around the globe. And the gentlemen on this stage are working to solve that pain point, not only for Bermuda, but for other jurisdictions with their banking-related projects. So I'm really excited to welcome Terry Rupp from ATCE Holdings in the US, Ivan Soto-Wright from MoonPay, which is a next-generation payment processor, Chance Barnett, who's the co-founder of Jewel, which is a really exciting fintech company, and Darren Wolfberg from Blockchain Triangle, which has really actually been actively investing here in Bermuda. So we're going to sort of get started with a look at banking and digital exchanges. So why don't we start, let's see how we can do this, because you're all representing a slightly different area of the world. I think, why don't we start with Chance on what you guys are doing at Jewel, and then we're going to kind of mix this around for these areas. So we have kind of investment in traditional banking, we have new banking, we have payments, and Terry's company, ATCE, is building what we call core banking. So we'll get into that in a second. But kicking off with Chance.
Sure. I'll just touch on one of the points that you mentioned because it's, I think, pretty universal in the digital asset space. So we're Jewel. We're in process of obtaining a banking license here in Bermuda. One of the core issues is customers globally that are mature digital asset businesses or upstarts have a very tough time just getting a traditional bank account. So that's one of our core purposes and we're focused on. But on top of that, there's a larger opportunity, which we see, which is all roads on blockchain and digital assets at some point or another lead back to final desire for settlement, i.e. how do you get it back into fiat? How do you get it usable? How do you meet payroll? How do you settle with a trade that you've done with someone? And some of that stays on exchanges, and some of that wants to come on to exchanges and back into Darren's pocket, hopefully. So
we hope.
What does that next generation set of settlement, payments and settlement tools look like? How does it connect to the traditional system? What are the risks involved with that? And then how do you actually regulate, license that, and operate it at scale? And that's really what we're focused on, is providing that core blockchain-based payments and settlement layer at Jewel that is a much bigger global opportunity. While the Bermuda opportunity is exciting, this is also, as we've been talking about, a great launching pad for thinking globally about fintech.
Okay, and we'll come back to some of the recent changes in Bermuda around banking, which actually set the framework for potentially global banks rising out of Bermuda. But on that note, Blockchain Triangle, the work that you guys are doing, and can you talk a little bit about what you're doing here in Bermuda?
Yeah, so we focused on really the registration piece as well as advisory. Registration from the standpoint of registering your company, doing AML, KYC. Those are key aspects of a bank and onboarding clients. So our goal is, instead of having a 3 to 4 month process to register your company, get your bank account, get insurance up and going, that you're able to come to market within weeks and get to the business of doing business. And I think that's where we've really focused. We're working with a couple different banks that we're working to streamline that process for them with blockchain technologies, with different tools to really streamline that delivery so that corporations can get to the business of doing business. And then on the advisory side, once you have the company registered, there's digital asset submission, there's DABA registration, and then the other part is on the advisory side and capital placement. That's where we also act. So it's really an advisory and registration segment of the marketplace, and we're working with banks in order to get them to the business of doing business.
Right, and yeah, and a lot of very interesting things that Darren's been working on here in Bermuda around the banking industry and helping to evolve that. Let's go to core banking, and then we'll come to Ivan on payments. So Terry, your company, ATCE, is building what we call core banking services. So can you explain a little bit to the group what the challenge is with core banking right now, and what you guys are doing to solve that?
Sure. So legacy core systems are really holding banks back at this point in time, because they're not real time, they're not event driven, they're very monolithic in nature for the most part, and they rely on skill sets that are becoming very, very difficult to find in the industry today. So we're fundamentally different. We're breaking things down. We are bringing to market a cloud-native system that is component in nature, and it is deployable in containers and in a composable way. So what that really means is we're bringing speed to the market that's not been seen in the past. We are partnering to deliver stablecoin in payments, and we will have blockchain offerings as it makes sense to implement blockchain. In the payment space in particular right now, our viewpoint is probably not so much, and not so much because of the throughput of blockchain as it pertains to payments. But in loans and in various other contract vehicles, yes, absolutely, it makes sense. So that's a quick backdrop.
Right. So one of the interesting things is that most of the 7,000 banks in the world operate on systems that were built on mainframes or a system called Cobalt, and this is relatively complicated and super customized by bank to bank. So it's made it very, very difficult for banks to be able to onboard new technologies, and the ability to even take advantage of something like blockchain, assuming the regulatory side was clear, isn't easy for banks because they're still running systems that were 40 years old. For Ivan, you guys are new in the market and you've started from scratch with the payment system. Can you tell us a little bit about what you guys are doing and how you're using blockchain to drive payments?
Sure. Before I start, I'd love to get a sense of the audience. How many people here have purchased cryptocurrency using a debit or credit card? Okay, we got some people. So that's exactly my business. So essentially, in a nutshell, MoonPay offers a full suite payment platform to enable wallets, exchanges, and websites to on-ramp end users from their debit and credit cards seamlessly into cryptocurrencies. So we're combining kind of the traditional financial infrastructure, working with the legacy card acquirers like Visa, MasterCard, also working on new mobile payment methods like Apple Pay, Google Pay, and making it really easy for end users to buy their first cryptocurrency. If you guys have gone to an exchange, it's still quite complicated. I think to get used to going through the various steps, having to onboard, provide your basic customer information, go through KYC. There are multiple steps before you actually get your first cryptocurrency. What we're trying to do is just streamline that process, offer developer-friendly API tools that developers can easily build the seamless experience that they want and what their end customers expect. So that's MoonPay.
Okay, so what I see here, in a way, is like a super bank, right? You got next generation payments, you got core banking, you got full-on stablecoin and like next generation banking services, and then you've got like identity and advisory all in one. So in this imaginary bank of the future,
And you're the chairman.
I don't know, I'm just the moderator. But of course it would of course use Ben. But this bank of the future, this kind of super bank, it does actually present a model for what banking of the future could look like from Bermuda. So I think many people in Bermuda understand that there are limitations that the existing banks have to abide by. So one of the problems is that there are limited correspondent banks that operate in and out of Bermuda. And so everybody is very much reliant on those correspondent banking relationships with Wells Fargo or BNY Mellon, and their lack of ability to accept digital assets in crypto is holding back some of the opportunity that could exist for doing more. So can you guys give us like a sense of how you can see your businesses playing and solving that problem here in Bermuda?
Sure, I'll start. So I think that given some of those regulatory complexities that exist in the corresponding banking world, I think there's going to be a very much of a crawl and then walk before you run. And I think that if you keep it in the world of fiat, that will give regulators and those banking partners a clearer path to staying within the goalposts that are identified today. So if you're doing a dollar for dollar stable coin based on fiat, I think that's a much simpler thing for them to understand. And from the standpoint of AML KYC, that cash is coming from an approved institution. So I think from that perspective, there's going to be iterations of this. And I think that the first place you're going to see it is stablecoin adoption here on island. And how that flows downstream from whether it's healthcare to social payments to retail. I think you're going to have these hops of different categories of the sector that are onboarded and turn these services on.
I guess I'll jump in and chunk down on that a little bit to say, I would separate it out into two buckets. There's retail, which is, I'm now that banking guy who calls a certain class of people retail, sorry. Individuals, right? Everyday people who want banking services and want to play in this world, and people with lots of money or institutions. And in those two groups, I think there's really different needs. So as we're talking about, what's this regulatory sandbox? What's Bermuda going to do? I think there's a huge opportunity to do something that in this institutional world, on one hand, can be a lot more open than some of the approaches. So if like JPM Coin or Signature has their own network, there's already some settlement going on. There's stable coins out in the world. It's actually not that interesting because they're just providing internal ledger transfers, but using a blockchain messaging system. I'm not saying it's not cool. I'm saying, of course, regulators don't have a problem with it. It's like another way to trade your bank balance sheet. I think it becomes interesting, and there's significant efficiencies added when you can do that in a more open network and allow intra-bank and not among different bank transfers and create a more open network. And then I think that's even more significant when it's introduced to us everyday people as consumers, where we can truly be liberated, I would say, in a way, by banks, not be put into a bank, so that you and I can connect peer-to-peer in a much more direct way without a bank constantly trying to get in the middle and extort fees. Not that I don't want a great business model as a bank, but I also think there's a better way to do business. So I think Bermuda is looking to lead in a lot of those ways. Part of that is the idea system that they're building. So how do you wrap a bank? How do you support that as a bank? How do you empower people both on an institutional and everyday person level? And I think that's what we're all here looking to do, and it's an amazing sandbox for that, so it's exciting.
I want to come back to you more about what the vision is for Jewel in particular, because I think that as a new banking entrant into Bermuda, it's a very big deal that you guys are going down that path, and I think people would love to hear a little bit more about what the plan is for Jewel. But we're going to come back to that in a second. Can you guys continue on that?
Yeah, sure. I'm definitely not an expert in Bermuda regulation, but I guess I deal with operating my service in many different jurisdictions and countries. And obviously what's helpful is having a clear regulatory framework in which to operate your business. And I think there have been some countries that have taken a very aggressive stance towards regulating cryptocurrencies. United States, for example, you have money transmitting licenses state by state, and then you have a BIT license, obviously in New York, if you want to be a broker or selling cryptocurrencies. And then places like Europe, specifically, we decided to actually incorporate our business in Malta because they were one of the very first to offer this Virtual Finance Act, which set out the rules for brokers and cryptocurrency exchanges. So would love to kind of see something kind of similar, pari passu in Bermuda. But it's obviously difficult territories to navigate because cryptocurrency is very much a global, of global interest, and you have customers from countries all over the world. So I guess from my side, I think it all comes down to having those clear set of guidelines and rules, and hopefully Bermuda can stand out from that perspective. Also having the service providers there, that's another key piece. So for a lot of crypto businesses, it's very difficult to find banking solutions. So it's great to see someone actually going out and creating a bank from scratch. I think that's much needed because a lot of the legacy banks, they're scared, right? For them, it's a red or kind of amber on them in terms of whether they should accept cryptocurrency businesses or work with cryptocurrency businesses. They just see it as perceived higher risk. So having kind of crypto native businesses or businesses that are being built from the ground up to support this new ecosystem, I think is extremely important. And hopefully Bermuda can foster that type of innovation.
So Ivan, before we move on real quick, so just for the benefit of the audience and even myself, Would you say that what you guys are doing is a kind of next generation Stripe or Square, but on crypto? Because that's a pretty interesting innovation in and of itself, because the basic wisdom is that you can't run a lot of payments over crypto in large volumes. Is that what you are? And if so, how are you doing it?
Yeah, some people called our platform kind of Stripe for crypto. Really, the idea is it starts with developers, right? Developers need to feel comfortable using a very simple fiat rail. And today, getting access to that fiat rail is quite painful. So if you go to just trying to find a merchant acquirer. So when you actually process your debit and credit card, that goes through a merchant acquirer. And the challenge has been in many different geographies, they've restricted any sort of card related to high-risk payment processing. And unfortunately, cryptocurrency falls into that bucket. So, the challenge is first finding a merchant acquirer that's willing to accept that. What's quite interesting, I've had kind of conversations with both Visa and MasterCard. It was really much a red activity in the past, and now I think it's more amber and green. So they're looking to offer, they're trying to give the green light to enable people that are regulatory compliant and making sure that they're performing KYC on the end users to be able to transact with their Visas and MasterCards. But yeah, in terms of our overall vision, Visa and MasterCard is the beginning. We're offering kind of bank transfer rails, any sort of payment in from the fiat world into the crypto world, that's something we're trying to support, and vice versa. And really, I guess what we're trying to reimagine is today, if you try to actually buy cryptocurrencies on a lot of sites, you're redirected kind of to this like web widget, which is quite painful to an end user. It doesn't feel native to your experience as an end user. And end users today demand kind of the experience that they have on Venmo, the experience they have on Robinhood. So what we're trying to do is offer that infrastructure and making it really easy for developers to play with.
Okay, thank you. Terry, what is a bank in a cloud, and how does that relate to Bermuda? What is a bank in the cloud? And because you guys offer one of the first core banking systems that is in the cloud. So tell us what that is and how does it relate to Bermuda and helping the banking system here?
Okay, before we do that, just a comment or two on crypto and stablecoin. We believe in crypto for sure, but we believe it's going to be a journey, and with any journey, you can have waypoints. So logical waypoints that we see in a journey to crypto would be stablecoin. So, how long we will visit that waypoint is in the yet to be determined zone. But there's a tremendous amount of benefit that can be reaped from visiting that waypoint for sure right now. In a relatively closed loop system, you can start taking major bites out of the ridiculous credit card fees that get charged to smaller institutions that are just tearing profits away from them. So you can flip that model completely upside down and have, with stablecoin, you can have a closed loop system where the system actually starts paying for itself instead of you paying to use it. So I think there's phenomenal benefit that can be reaped from that particular waypoint in a journey to crypto. With regards to cloud computing, I think that what you really need to realize when you talk about cloud is there are all different types of clouds, if you will. So there's everything from a private cloud completely on-prem to full up public cloud. And some banks will run very quickly toward the utilization of public cloud, where others will be running in a hybrid for the foreseeable future. But the key to it really in terms of an offering is to be able to segregate your data from your transaction processing and let data stay where regulatory requirements provide you the most comfort, if you will, and let your transactions happen in whatever environment best suits them. So, from our perspective, that's the way these systems should be constructed. That's the way we're building ours.
Can I just bump in? Yeah, just to comment on kind of fees related to debit and credit cards, because it's definitely a sticking point. For us, it's really about mass adoption. So how do you get normal retail users to interact with cryptocurrencies? So Debit and credit cards is obviously a key part of that rail because it's in everyone's pocket. Everyone's very used to paying with their debit and credit card. But the reality is it's expensive. And the reason why it's expensive is cryptocurrency, it's in its nature, it's irreversible when you actually deliver cryptocurrency from one address to another. So the nature, when you're actually processing a debit and credit card, you're at the highest possible risk level for fraud, right? Because someone can take a stolen credit card, strike that stolen credit card, we deliver the cryptocurrency, the person that had their credit card stolen calls the bank for a chargeback, and then we're out of the money. We've delivered that cryptocurrency. So there's a higher premium, and that's why you see that higher premium related to debit and credit cards. But I definitely will say the future is kind of this bank transfer or this very simple on-ramp into stablecoins, and that's something we're trying to build for and solve for the future. The problem is the UX today isn't really meant for, it's still quite tricky for end users to set up, in some cases, their bank transfers. In some countries, bank transfers are quite slow. So for example, in the United States, you have a 3-day ACH waiting period. So that's something we're hoping to solve with kind of an instant process, and you can do that by doing clever FinOps, so similar to Venmo. Venmo, when you're actually transferring from one person to another, it is instant and it feels instant, but in reality, they're still playing on the legacy banking infrastructure. So there's a lot of those kind of cool techniques and tricks that you can do on the FinOps side to make it appear instant, but ultimately it comes down to solving the problems for the end user to get people to interact in this ecosystem. So hopefully we see those fees come down, we see more people doing kind of automated kind of bank transfers that are really easy and seamless. New technologies like Plaid and Yodlee enable you to connect to your bank account to set up things like weekly or auto monthly buys. So I think we're going to see a lot of innovation and enabling kind of end consumers to interact with cryptocurrencies, because as it is today, it's still quite a cumbersome user journey.
Okay. Circle back to a couple of points. So this morning, earlier, Liz Raban from Celsius mentioned that she doesn't like the word stable coins. And I laughed to myself because this summer in Ibiza, Andre and I had a discussion about the same thing. And we were talking about synthetics being kind of a better word for some of these things, because the reality is that stable coins doesn't describe the entire market. So you have kind of fiat versions of coins, which is what stable coins sort of refer to, but really what these are is synthetic assets. And so if I was going to put a tweet out there for you, Liz, I think I would propose synthetics as being another word that we could use.
I mean, I'm kind of a geek, and no one's going to get out of bed for synthetic assets.
No?
I mean,
You hate it? Yeah, it sounds like a
I mean, yeah, it might be interesting after hours, but not during business hours.
For the audience, if you have another word for stable coins, my offering for the moment is synthetics, but if you have another one, tweet it out and put it out to the market. But the reason I brought that up is it leads to another question, which is really about definitions, right? So this is a panel about banking and exchanges, and we haven't really talked about exchanges yet. We have talked a little bit about payments. One of the things that I see happening is there's a merger and a blurring of what things are. So in the old world, you had exchanges like NASDAQ and other places where you would trade assets, but that was very different from a bank, right? And banks were very different from payment systems. But in this new world, I don't know if I see that much difference between the three. So I'm wondering if you guys could talk a little bit about that and whether you agree or disagree, and where are the new boundaries?
Yeah, I very much agree with that. If you look at the major players in the market, Binance, Coinbase, Gemini, whoever they may be, they are typically custody and exchange in one package. Whereas in traditional sense, you have exchanges, you have custody providers, you have banks, each doing things differently. Some offer leverage and margin, some offer prime brokerage services. And I think what we're seeing is this technology is redefining the definitions as you coined the segment. But then it's also the business models that are associated with that. So are you going to charge for custody but not for execution? Are you going to charge for lending but not custody? And I think right now there's this exploration as far as what is the business model that works in this new ecosystem. And obviously, whoever, whatever it is that your service is core, you'll try to steer it that way. But I think at the end of the day, consumers will go where it's most efficient. And I think, coming back to stable
Do you
coins,
think there's a barrier now between being a bank and being an exchange? Or
I
do you
don't think there is a
gone?
barrier. I think the only barrier that is potentially one that could be imposed by regulators, where they're very much. I'll speak to U.S. regulators. They're very much, well, a security is a security, and as a result of that, they may try to take the square and put it in a round hole, and say, well, you have to follow traditional norms because that's how we follow them. I'm not saying that's the right answer or the wrong answer. All I'm saying is regulators have a tendency to do that.
Chance, how does that apply to Jewel?
Well, I'll say, taking the example, our exchanges, banks exchanges, my perspective is, well, first let's take Coinbase, right? Everyone knows Coinbase. You deposit fiat currency generally. I mean, you can deposit Bitcoin if you want. However you get value in, it's a deposit. It sits there. You can trade it. You cannot trade it. And now you can earn interest. Looks like a bank. Smells like a bank. Connected to a lot of the rest of the traditional banking system. I would just introduce something else as material. When you move into what is a bank, who is a bank, how do you license a bank, how is it regulated, there's a whole set of other risks that you have to evaluate that you don't always want to lump in all the exchange risk, which is its own set of stuff. So that's my viewpoint. How does regulation play into this? From my perspective, it's like, great. Could someone come along and think about a bank as an exchange and do the whole stack? Yeah, I know a lot of exchanges are angling that way. And of course, as a bank, you think about exchange because there's fees. It's just an extension of your model. From my perspective right now, we're not in a world where regulators want to jump into everything all the time. I would say it's better than incremental. Things are really starting to happen. In the next 3 years, I'm incredibly excited and bullish about. But I think exchange risk belongs outside of a bank today. But there's a natural and really important close partnership there. And those are things we're really excited about at Jewel.
Yeah, I think that's a really interesting point. Like the risk profile of the two are extremely different, and merging them into one could cause issues. Terry, any thoughts?
Point, if I may. I think that so far in this discussion, we've been talking about things from the perspective of various fiats, various exchanges, cryptocurrencies, stablecoin, et cetera. But it all distills down to traditional banking and looking at things the way that we've looked at banking for the last 50 years or more. It's just how you're going to exchange things. And that's what's broken. That's what's broken in the system. Banks are still aligned in a very traditional siloed sense that they've always been aligned in, and that is by banking product. So I have deposits, I have loans, I have the various products of a bank. And today's banking clients don't really care. What they're really interested in is their financial journey, their personal financial journey. And so the problem is the systems, the legacy systems of banks are not aligned to deliver that today. So that model needs to be flipped on its side, regardless of what you're doing to actually satisfy the exchange, whether it be crypto or whether it be stablecoin, et cetera. So.
Okay, good. We have a couple more minutes. Does anybody in the audience have a question? You guys don't have any questions? I know you have questions. Angelina? Yeah. I don't know if we have a mic handy, or if you can shout. Thanks.
I like your flower, by the way. That's awesome.
Thank you. I'm Angelina
Feather.
from W1 platform in Hollywood and Auto Studios from Hollywood. My question is regarding the payment solution that, as you just mentioned, that you could provide a solution for blockchain that the individuals, users could purchase a cryptocurrency with a debit card, credit card. Is there any particular requirement for certain nationalities, such as, for example, in certain countries, Chinese required the national ID and linked with your national ID number in order to purchase cryptocurrency? If you could provide that solution, I think we have a huge business to do together.
Yeah. So unfortunately, we don't operate in China today. It's obviously a huge market opportunity, but mainly for that reason is you need to have, for us to operate in any jurisdiction, we need to have a legal opinion that we can operate in that jurisdiction. And some countries have banned purchase of cryptocurrencies via fiat, China being one of them. There are other countries in the world that have taken a more progressive stance where you can buy cryptocurrencies as long as you perform KYC and you perform the AML and comply with the various regulatory bodies. So it's kind of, you have to play regulatory arbitrage. You have to find every country and find local lawyers in each of those jurisdictions to operate. Crypto businesses, businesses like Binance have gone away with a lot because they were crypto to crypto. It's as soon as you introduce that rail into the fiat world where regulators start to really take notice. So it is a highly regulated space, but we're trying to expand our geographic coverage as quickly as we can. We're operating in 40 countries. We actually just launched in Hong Kong yesterday. So we're starting to move into kind of the Asia regions because there's obviously a lot of demand in Asia for people to purchase cryptocurrencies. I also didn't really get to comment on the previous set of questions, but what I wanted to say about kind of thinking about banking and exchanges and these various definitions, I think the one piece that was missed is what was the purpose of cryptocurrency? Part of the purpose of cryptocurrency was to unbank yourself, in my view. And I think what's interesting is you still have that legacy infrastructure that really matters. And when we talk about Coinbase, they're a centralized exchange that's holding kind of those crypto assets. What I think is super interesting and kind of the new paradigms that I'm most excited about and what we're trying to build for at MoonPay is this non-custodial movement. So the idea that end users can actually take control of their private keys and have they're essentially doing their own self-custody. I think that's a really interesting piece, especially when you start to introduce things like lending, because you could essentially unbank yourself because you can take your cryptocurrency, your stable coins that you're holding, and then give it to a provider. There are many different providers in the market today, from Celsius to BlockFi to many different players, and you can actually earn yield. What's interesting for retail investors today is they haven't been able to get yield for many, many years. If you park your money in a bank account, you're earning basis points, whereas the opportunity for percentage points, I think, is quite meaningful. Now, over time, those yields are, of course, going to compress like any market, but I think it's a quite attractive opportunity for people to actually start using cryptocurrencies today and not use all the legacy financial infrastructure. I think in time, custody is going to be kind of a power game. You're going to have consolidation across a couple of major players that are doing the custody. You're already starting to see that happen. So players like Coinbase acquiring the custody business from Zappo is exactly aligned with that thesis. Custody is going to be done by a couple players, and it's going to be done really well. But for me, what's interesting is this whole decentralized finance movement that is really enabled by cryptocurrencies, being able to actively stake your cryptocurrencies, and that also comes down to having good UX, good UI, making it easy for people to do self-custody.
Okay, great. Any other wrapping up comments, guys?
I would just add to that, I agree, I love playing in that world as an individual, as an investor, as a person, non-custodial, holding my own wallets, my own keys, totally appeals to me. And then you enter the institutional world where they wouldn't be able to do that. In fact, their insurance and all the regulations they sit under would have to require a custodian and more centralized approach. And so I think it's important to note that there'll be a lot of different approaches. And I also want to be a crypto cool kid, but I'm also a guy creating a bank. So you want to service the right people with the right tools. And yes, I'm happy we're getting away from banks as individuals and taking charge of our own destiny and our finance. I love that. I think we have a question out there. Natalie?
See, I knew there were questions out there. Let's do one more question.
Just a follow-up comment to what the last speaker said. And I think the idea of decentralized finance is super cool, but as you mentioned, you're operating in a number of jurisdictions with different regulations. How much that is the current reality, given that most regulators are grappling with the idea of decentralization and how to convince onto an entity to regulate it. I'm just interested to see how that plays out.
Yeah, I mean, I think one of the really interesting things that's happened is that DeFi, or just decentralization in all forms, ends up being like at the very least put into some form of organization. So like everybody's talking about DAOs and decentralized organizations, but if you really like look at Ether.io and the MakerDAO, they're actually still housed in LLCs because the legal liability of purchasing an asset in those environments would fall to the end user. So if, like, I liken it to if you buy, imagine if you bought a Coke, but then you were legally responsible for the activities of Coca-Cola Inc. or the liabilities of Coca-Cola Inc. Do you guys see a solution to that?
I mean, I can't speak for Coca-Cola, but I think that, this murkiness, decentralization, regulatory centralization, I think we're kind of in this murkiness of them coming together in various forms. And I think those that are able to navigate that regulatory arbitrage, to use your term, those that navigate that fastest and most efficiently, I think, stand to gain a lot because, getting into the game late is just time. To get an ATS approved in the U.S. a digital security ATS is at least 24 months, and no one has been approved yet. So if you're just filing now, guess what? 24 months.
Yeah.
So I think, those that are early to the various jurisdictions where they want to plant their flag and kind of work with that ecosystem that is regulatory and compliant, I think those are the groups that, have first mover advantage. You still have to execute. You still have to get customers. You still have to solve problems. So I think, that's how we're kind of looking at it. And we think that Bermuda provides that ecosystem to really build off of the foundation that they have here, both from a banking perspective, a stablecoin perspective, an AML KYC perspective. By tackling those issues here today, you're getting that leg up on other jurisdictions.